Welcome. In this video. Will Xcoin break the silence soon? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. In the last analysis video, I mentioned an important technical development that I had noted. There was a prominent falling trend line on the chart that had been blocking the price and driving the declines for a long time. This trend line had been tested many times, but had not been broken, and each time it had generated selling pressure. However, in that analysis, I stated that this trend was now very close to breaking, that the price had repeatedly touched this structure, and that upward pressure was increasing. Indeed, in line with technical expectations, this downtrend was finally broken, and the price managed to break above this line. This breakout was an extremely meaningful and promising development, because for a long time, there was a period in which sellers dominated the market and buyers had difficulty gathering courage. However, with the break of the falling trend line, we started to observe that this situation has started to change, and that the market psychology is slowly evolving in a positive direction. Such breakouts are not only a technical turnaround, but also an indication that the mood and expectations of the market have started to change. Now we have a new and bigger test ahead of us. With the break of the short-term downtrend, all eyes are now on a longer-term, more decisive structure, a major downtrend line observed over large time frames. This structure represents a much stronger resistance zone compared to the previous broken trend line. This is because this line may have been pressuring the price for months or even years, not just a few weeks. A break here would therefore not only be a technical development, but a strong signal that the trend has completely changed and a bull market is at the door. Looking at the current price action, we see a convergence towards this major falling trend line. After breaking the minor downtrend, the price consolidated in a healthy way, built its support, and is now moving decisively towards higher resistance levels. Technically, this is a very healthy price behavior, because the slight pullback and rebound after a trend breakout tells us that both strength is gathering and buyers are taking control. With the breakout of the major downtrend, the price can be expected to break through psychologically strong peaks that it has not reached before. In particular, the most recent high will be on the agenda as a target immediately after this breakout. This is because, as is known in technical analysis, when a resistance is broken, the price usually heads towards the next level. That is the previous peak. If this level is also crossed, then we will see a much wider bullish potential. In such a scenario, the upward movement of the price would be supported not only by technical traders, but also by traders interested in fundamental analysis. This is because such major trend breakouts usually coincide with periods of heightened positive expectations for the market, supportive news feeds, and increased investor confidence. This means that prices enter a more stable and long-lasting uptrend. But we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. From a short-term Elliott wave theory perspective, the current price action is looking quite promising. The price is currently in the second wave of correction after completing the first wave, and the technical outlook points to the beginning of the third wave. According to Elliott wave theory, the third wave is usually the strongest and longest. It coincides with the period when market participants are clearly bullish, trading volumes increase, and buyers play a dominant role. Therefore, it is possible to say that we are currently in the preparatory period before the third wave, and the price is quite close to moving upwards with a strong momentum. The completion of the second wave is usually an important signal for investors. This is because this wave of correction usually represents a period of healthy rest following the first uptrend. During this period, weak hands leave the market, strong traders strengthen their positions, and then the third wave begins. In the current technical outlook, this transitional phase is coming to an end, and the fundamental dynamics needed to trigger the third wave are slowly building. To understand how effective the third wave can be in Elliott wave theory, it is enough to look at past examples and statistics. Usually, this wave extends between 1,618 and 2,272 in terms of Fibonacci levels. This suggests that there is a potential to go much higher than the current price level. If the price initiates the third wave in line with these theoretical expectations and heads towards the Fibonacci projection targets, it may be possible to see a serious upward movement in the coming period. In the current situation, it is a significant advantage that the price is not only moving in accordance with the Elliott wave pattern, but also adapting to the overall market structure. The volume profile, momentum indicators, and reactions in support-resistance zones during price movements provide technical signals that strengthen the possibility of a third wave. In particular, The fact that the price is approaching an upward trend line indicates that if this structure is broken, the price will accelerate further. Because trend breaks are one of the clearest signs that a new trend has started in the market. If this breakout coincides with the beginning of the third wave, then it is highly likely that the rise will occur much faster and stronger. What's also noteworthy at this point is that the price is moving in a very regular and healthy structure during this process. In other words, the price is moving upwards in controlled upward and correction steps rather than sudden and erratic jumps. This kind of price behavior makes it easier for investors to psychologically adapt to the process and increases long-term confidence. This makes the third wave more likely to be supported by a broader investor base. It is also important to remember that the third wave is usually accompanied by the strongest news flows in the market. During such periods, factors such as positive news, new collaborations, emerging projects, or improving overall market conditions usually support price action. Therefore, technically, if this time period, when the third wave is about to begin, also finds support in terms of fundamental analysis, this rise may be more permanent and more effective. If the price makes an upward breakout in line with these expectations, and the third wave becomes active, not only short-term targets, but also medium and long-term resistance levels become targets. In particular, the Fibonacci levels of 1,618 and 2,272 are closely monitored by investors as both profit-taking zones and resistance test areas. Testing these levels could be one of the clearest signs that new highs are on the way. A close look at the RSI indicator reveals a distinct downtrend structure that has been in place for some time. This downtrend was formed as a result of the RSI's repeated attempts to move upwards, only to be met with resistance. However, we are currently witnessing a very important development within this structure. Not only has the RSI approached this falling trend line once again, but it also appears to have begun to break this level to the upside. This momentary breakout, if it becomes permanent, could be considered a very positive and promising signal in terms of technical analysis. Such downtrend breakouts are often considered leading indicators of price action, especially when seen on momentum-driven indicators such as the RSI. When the RSI breaks its downtrend to the upside, it indicates that market power is shifting back to the buyers and sellers are slowly losing their influence. This suggests that the current selling pressure is weakening, and we may be at the beginning of a new bullish wave. The RSI's path to this level is also noteworthy. The RSI, which has always faced selling pressure on previous contacts, is both stronger and more decisive this time. This suggests that the breakout was not just an ordinary attempt, but one backed by strong momentum. If this move continues, and the RSI settles permanently above this falling trend line, this will pave the way for upward movements on the price chart. When the RSI breaks a resistance line like this, it signals not only the end of the past trend, but also the start of a new uptrend. Especially with oscillators like the RSI, such structural changes often precede price action and therefore constitute a valuable early warning signal for traders. When the RSI breaks its downtrend upwards, it often indicates that the price will follow suit. We should watch the RSI for these breakouts. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.